7. Let's do quick 7. Start it. Alright. Just do this. We're measuring the cost of quality. The cost inspecting all incoming raw materials is in. When measuring the cost of quality, the cost of inspecting all incoming raw material is in. Internal failure cost, inspecting incoming raw material, prevention cost, appraisal cost, external failure cost. This is the balance scorecard question, so you have to know which category is for preventative. Balance scorecard categories are preventative. Oh, well, just look it up. Okay, let's look it up. See, it tells you everything about the balance scorecard. So it has financial and non-financial measures. Implies 4 categories of the balance scorecard is financial perspective, internal business perspective, customer perspective, and learning and growth perspective. Okay, let's just look at the diagram quickly. Yeah, what is the diagram? Customer, financial, process, learning, innovative. Okay, I know that the lesson before this it had to do with all that preventative, measurable, financial, and all that stuff. Okay, whatever. Measuring the cost quality, the cost of inspecting all incoming raw material is an internal failure cost. Quality is for the final product, so internal failure cost of the raw material. Yeah, that would be an internal failure cost, preventative cost, appraisal cost, external failure cost. I'm gonna go with internal. The answer. Yeah. Appraisal costs are costs that are when determining an individual unit defective inspection of raw materials is done in order to determine any type of raw material that defective, so that is appraisal cost. Okay, internal cost. Appraisal cost. So the reason why it was appraisal cost is because that incurred in order to determine an individual unit is defective. Oh, I see. Okay, I get it. Like, this is a whole different ballgame, because let's say if you have a shipment coming and you have insurance on it. So the point of the insurance is that the appraisal, like, you can either get the appraisal before you get the insurance to see how much your package is cost to get delivered. So for example, if you're getting something from AliExpress, like, it's better to have an appraised value, and then you can have insurance based off that if it's worth having it or not, you know. So they're looking at a different context. I was looking at it as a micro concept. So sure, look at both micro and macro, conceptualizing the two and then deciding for the best answer. In a macro environment, it would have been appraisal cost, but in a micro environment, it would have been internal failure cost. So let's see. The question wasn't too clarified. An ERP resource planning system enables the same information to be available. Okay, an ERP enables the same information to be available across departments such as purchasing, production, delivery, and sales. This can help in lowering. An ERP system enables the same information to be available across all departments such as purchasing, production, delivery, and sales. This can help lowering production costs, minimizing duplication of effort, all of the above, reducing wastage time. So what is the required? I don't even get it. An ERP system, which is a software for a lot of different departments. Okay, so an ERP system enables the same information to be available across all departments such as purchasing, production, delivery, and sales. This can help in lowering production cost, minimizing duplication of effort, all of the above, reducing wastage time. I think it's all of the above because it does help with all of the above. That's the answer. Perfect. That's kind of complacent, so you don't have to explain that. Her company plans to bid on a special project that calls for a total of 2,400 units. The units have been produced in lots, with the first lot consisting of 250 to 750 units based on prior experience at a direct label time needed per unit of product. Okay. What is it asking for? The quantitative method that would best estimate Huron's total cost for the project. Quantitative method. So what are the options? Discounted cash flow techniques, linear programming. Depends if there is just one variable to compare with another against another. So kind of like XY. Learning curve techniques, differential calculus, Y differential calculus. Quantitative, oh, maybe because of that. Product will be progressively small by constant percentage. Oh, I see. So it should be learning curve techniques because the products are constant percentage rate experiences gained in manufacturing process will be progressively smaller than a constant percentage rate as experience is gained. So it's definitely learning curve techniques because as the experience is gained, the learning curve decreases and the personnel become more skilled. Come on, be done. Thank God. What is the reverse? It uses a first in first out perpetual inventory system. The total cost of inventory for part number C588 at May 31st is okay. So compression holds the compressor power selected for part C588 during May is as follows: inventory unit cost, total cost, starting, beginning inventory. I'm just gonna make a quick chart, guys. Over here. Do it here, where. Word back. Come on, man. What's wrong with the mouse? I'm just gonna do this quick. So beginning of the so we're using first in, first out, and start with beginning inventory. They're asking for the total cost at the end for that this whole set of events happening. So first in, first out, inventory, total cost is that equals sitting at cost $3,430. First purchase. First purchase. Okay. Times 275. It's going to give us So to give us what? 4950. Just gonna check in my calculator. Calculator. So it is 1800 times 275. 2.75 times 1800 gives you the same thing. 4952. Okay, sales. We're gonna subtract minus sales. We sold 200 units. 200 units. So take away the 14 cost. So equals 3432. This is the cost for the first 1400 units. So right now we sold so we're sitting at minus 3,430, and next remaining as of start of May 16th is equals 2,000. So the remaining right now, no, it's not going to be as of May 16th, as of, no, so then we have to go where we have to sell 2,000, so we're missing another 400 to sell. Remaining 400 to sell. 400 units to sell. So that's going to be at cost 2.75 times 400. 2.75 times 400 equals, oh man, 2.75 times 400 equals 1100. So now see, oh come on, this is all gone. This is all has been sold. This is the second batch which we purchased, was 1800 additional units at this cost price. So now we're taking away 400 out of this because total sales were for 2,000. 400 out of this is going to give us 1100. And now we're going to go get the remaining balance. Balance at May 16th, sitting at what? It's going to be sitting at 1400 times 2.75 equals, let's just do this quick. 1400 times 2.75, 3,850. Now if you want to check that answer, check the answer. Check answer so far. So we're gonna go